What's up, everybody? Let's go. Now, this video is going to be about finding the trend. Your trend is your friend. That's why you want to find it. You want to trade with the trend. Now, the trend of the ticker symbol is going that you're trying to find is going to actually always going to be determining like what kind of trade you want to do. Personally, if you're doing a long-term trend, you need to make sure you have the right time frame. If you're doing a short-term trade, you want to make sure you're right on the right time frame. So typically, most people would say, if I'm looking at the long-term trade, I'm looking for the long-term trend, which I need to look at the years of what the stock has been doing. And you want to look at you kind of want to look at what the charts, what the trend has been doing for the last few years, just to give you a bigger picture of it. So right now I got CVS. Technically, CVS is sort of in a downtrend. However, it looks like it's getting ready to reverse that trend. And the way I kind of know that's about to happen is because the EMAs are kind of getting closer to each other. So again, if you saw the previous video, the EMAs is there. I have the 50 and the 200. The blue line is the 200 and the red is the 50. So what happens is when you get that golden cross, when you get that 200 MA to cross over to the 50, you're now in a downtrend because the 200 MA if it's catching up to the 50 MA, that means you're in a downtrend. So in this case, we see that here, it was in a great uptrend. See, this was an uptrend going from like 2011 all the way up till about 2015, 2016. And then it reversed around for a downtrend starting like around this time, but the golden cross is around here. So it's definitely surely into a downtrend. The 200 is the blue line and the red is a 50. The white line right here is your 20 MA. So as we see here, the red line is getting very kind of close, which is the 50, getting close to the 200. So this close as get, that means that CVS might be getting closer to being on a breakout on a rally run. I mean, it's about to get ready to be a bull. That's what we can only assume. Now, there's other stuff that help me here that helps me kind of know that we're possibly getting ready for an uptrend. The reason why I'm saying that is because right here we have what I like to call accumulation. So now that accumulation is basically the Wyckoff method, which basically is the principal laws of cause and effort and volume and everything that what he calls the composite man. And it's basically to let you know what the composite man is basically implying by the way they trade, by seeing how the markets kind of simply go from sideways, mark up. Oh, sorry, got it. Mark up, and then it goes into a markdown, which is called a distribution. So accumulation is when it finds this preliminary support here, and then this is the support. This is the trading range, here, here. And what we see here is accumulation is forming because I could tell the accumulation is forming because support is really starting to play around the support area. But that's a different technique. But this right here lets you know that CVS was in an uptrend previously because you got to zoom out. Zoom out, you have to zoom out. And this is for a long-term position, right? So this right here lets me that CVS was in a long-term uptrend from 2000, let's say 2006 all the way to 2015, been a downtrend ever since. And it's kind of stopped this little markdown and it's kind of getting ready for, looks like it's getting ready to go into a bull run. Now, this is for a long-term position. You got to zoom out. This is a weekly trade. This is the weekly time frame. Now, however, what if you're trying to do a little shorter trade? Now, I do not recommend short trades. I recommend long-term trades if you're not familiar with doing short-term trades. If it's new to you, I would prefer you to get better with long-term trading and then work your way down to short-term trades. Because I did short-term trades and worked my way up to long-term trades. You kind of pay the market a bigger tuition when you do it that way. So that's just my recommendation, right? So let's put out some things. So again, as I said, when the 200 crosses the 50, that's when you know you're in a downtrend, a clear downtrend. Of course, it crossed here, but clearly we knew they were in a downtrend around here, of course. So remember, sometimes your indicators kind of lag. So, of course, but in this case, we can see that it's kind of now moving a little sideways in the trading range. So, but what do you want to do when you're going for a shorter term trade and you want to figure out what exactly is the trend there? So, usually in this case, I just want to fix this. So, weekly would be the zoom out. And if I want to find my entry for my position, I'll look at the daily. Now, in this case, you'll look at the daily and then look at the 30-minute if you're trying to look for an entry on a shorter term position. Remember, your day trade. Actually, let me get rid of these events because they kind of like annoy me. I just like charts being so clean. I just when I get all this stuff and it gets annoying. But let's continue. So in the down, if you're looking for a trade on a shorter term time frame, finding your trend on the higher time frame is a more clear indication of where the stock might lead, what the stock is going to head to. So in this place, we're kind of moving sideways, but here we could tell we're kind of like in the uptrend, right? Can anybody tell why? I kind of said it, you should be able to tell. But you didn't notice there's a crosshair. Now the 200 in the daily has crossed the 50 into the 50 is now crossing into an uptrend. See that? Yep. Now, if you want to be, find your entry, I would recommend like look at the 15 uptrend, 30 uptrend, hour uptrend. And so in this case, what I kind of want everybody kind of get more familiar with too is that you could tell us a stronger uptrend when the price is above the 20 as well. So when the price is above the 20, it's a very, very much stronger uptrend. And this is the way you kind of can like find the trends. It's basically paying attention to where price at relative to the EMAs. If it's above the 20, if it's above the 50, and if it's above the 200. But for another double confirmation to know if you're in an uptrend, Bollinger Bands kind of also give you an indication too. See, when price is above this 20, let me get rid of these. When price is above this 20 EMA, 20 MA, I mean, this is, remember, the Bollinger Band is the 20 MMA with 2 standard deviations. From that perspective, what it's that telling you is that when price is above this line, this red line here, that price is in a clear indication of an uptrend. When it's getting down, it might be kind of similar to a downtrend, but you see how it's kind of like bouncing back and be kind of bouncing back and forth here. So this is kind of still more of an indication of an uptrend in this regard. If you wanted to see if it was in a more clearer downtrend, would need to be something like here, where price is clearly below the 20, hovering on the bottom of the channel. Hope I'm explaining this clear enough. I sometimes got so used to this that it's just second nature now that I'm hoping that I'm not skipping over anything that can help y'all really figure out exactly how to find the trend. because this was like one of the number one questions, is basically thinking like, how do you know where price is going to go? And I mean, to be completely transparent, nobody clearly knows where price is going to go. We're just using all the information at our tools on our utility belt to tell us where we believe price will go. And so we use the tools such as the MAs, the moving averages, Bollinger Band, making sure it's above the Bollinger, on the top of the Bollinger Band for an uptrend. And we use some other indicators that some people like to use, such as like the MACD, the RSI, stochastic. And these are some of the things that kind of help you if you're in an uptrend as well. And the MACD, of course, remember, it tells you how strong that trend is. The higher, the darker these colors and the higher the volume that you see, clearly says that this is an uptrend. If it goes down, downtrend, and it's dark red, remember, this is, you have to always pay attention to the time frame that you're on, because what you see on a 1 hour isn't going to be true for like the weekly. You're not, see, like here in a weekly is kind of like in a downtrend. But if you zoom out a little bit more, it's kind of been on the uptrend. So you have to make sure that you are aware of the time frame that you're referencing. You have to kind of put the time frames together to kind of give you the better story. Because if I see an uptrend on the weekly, and then if I see an uptrend on the daily, I know for sure I could trade with that trend. But you might be in an uptrend on the weekly, but you could be down on the daily. You could be in a bear trade on the daily because it's on the daily time frame, it's in a downtrend. So you want to make sure that you are aware of the time frames that you are looking at, and you put the time frames together to give you a bigger picture of everything that has happened with the stock. You need the time frames to tell you exactly what's going on. And the more you look at the time frames, the more you get used to this, the better you'll be able to just put all the pieces together. So hope that's helpful. Oh, I did say something about puts too. So one of the ways that I do puts, and I kind of like try to decipher about if I'm gonna get into a put, is similarly. Of course, you can use the Bollinger Band if it pops out, but what I needed to do is pop out also on the weekly, or be on the top of the channel on the weekly. I need to see the RSI kind of on the top of like the support, or very high, like what I've noticed when it comes down. I need the weekly to confirm my downtrend. See, when you find a trend, if you know that on a weekly that there's a downtrend, then you can also find your entry on a daily for your downtrend as well. See, sometimes if you look at the trend from a daily perspective, that only means you might have a downtrend for like a few hours or that day. You don't really want to make your move on a put, because puts are like very, very, very dangerous to your account if you don't know exactly what you're doing. So what you need to do is you want to have triple the confirmations for when you want to do a put. I want to see the same thing on the daily, on the weekly for my confirmation for a put, and then I want to see it pop up on the hourly. See, once I see it pops out on the hourly, then I can say, oh, this might be a move for a downtrend. See, I need all my confirmations. So I need my confirmation. I need to see a downtrend clearly on the weekly. I need to see a downtrend daily. And I need to find my entry for a downtrend on the hourly. And there's ways of noticing, like this is an uptrend right here, right? But you see how it's kind of like dying out. So it's kind of dying. The volume died and then everything. Just maybe it's moving, now it's moving sideways. So cash stick is like it's about to cross. Remember, when this crosses, this is a downtrend. So when this orange line is above the blue line, it's going to give a downtrend. And this is what it looks like it's about to do on the hourly. On the weekly, I'm kind of seeing you need some more time. The volume's a little low. Uptrends moving. It's kind of look like it's going to move a little sideways. So you kind of want to just you want to just be patient, just wait a little bit for more confirmation, because you want your trades to be, you want the market to give you the best opportunity to get into the market. You don't want to force the market. You don't want to hope the market does this. You need to trade. You need to be trading what you see, not trade what you hope, not trade what you feel, not trade whatever beliefs or whatever you have that you think the market is going to do this. No, you need to trade exactly what you see. So you need to see the downtrend on the weekly, the hourly, and the daily to before you get into a trade for a put. So that's how you kind of want to do your puts. Um, Again, like this is like one of my features. I love this. I love this indicator. It kind of takes a lot of the mystery work out the way. Um, Go no go, Trim Pro. Um, so if I don't see no go, which is basically mean short on this, I'm not gonna get on it. I'm not gonna get in on it. Unless it was a day trade, then it would be a different story. But I need to see the no go here. I would need to see the no go here. And then I'll find my entry like on the hourly or something. Or 15-minute. So you gotta find what works for you. Different time frames you can find out you might feel better about with different time frames. It's kind of the contingent on you for your entry point. But yeah, drop the comments. Let me know what you need more clarification on. I know it's probably not explained in the best layman terms, I think, exactly. So I apologize for that. But yeah, just let me know what can help you get it better. All right, let's go.